Howdy folks, welcome to the Daily Coin. My name is Rory and today is Monday, August the 7th, 2017. And I have the big yellow hat wearing, MacBook toting, founder and president of Turdville, Mr. Craig Hemke of TF Metals Report. Craig, welcome back.
Hey Rory, thanks for the invite. It's always fun to talk.
Well, I'm glad that you're here. And we had some very odd things to happen last week. And you did a whole series of reports for your subscribers, which I am. And this is one of very few subscriptions that I have, and it's only pennies a day, so it's not like it's costing a fortune. But you laid out a scenario that showed the metals moving to the upside, all of which made perfect sense. All the dots were connected. All the T's were crossed, the I's dotted. I even did a quick analysis based on some of what you have taught me, along with a few other pieces of information that I was able to find to support my thesis. It all went to hell in a handbag on Friday. But before that, and this is what I want to ask you about, Sydney, Australia precious metals market opened on Wednesday night, and at 7:06 p.m. Eastern, as you noted, there was this weird spike down, an immediate spike back up, and then on Thursday, we saw the same spike, not as intense, but the same spike down, and the metals have not recovered from this. My theory is that it was either some rookie who hadn't been shown all the buttons to push, and he was at the helm, or she was at the helm, or the criminals behind the curtain were testing some new forum to use in the illiquid access market. I mean, what's your take on what happened in the Sydney market on Wednesday and Thursday night?
Well, and I would remind you too, this happened at the exact same time. This is what caught my eye originally. And I immediately sent it off to Zero Hedge, made sure that they saw this. It was at 7:06 Eastern time on July the 6th that we had the flash crash of 10%. Where 5,000 contracts of September silver were dumped at once and moved the price down 10% inside of a second and caused a trading halt. And so when we saw it again at 7:06 last Tuesday and so just right before 7:06 last Wednesday, you can't, this is obviously not some, you joke about a rookie and a fat finger. It's not that. You could make a case that it is just an algo run wild. We saw it move up and down within a minute, as you mentioned. I think that was the first one on Tuesday. So you can make a case that it was just a stop run, but that's really not what happened back on July the 6th. And that's certainly not what happened in gold back on June 26th. These events are structured for a number of reasons: to paint the chart, to break price, to destroy sentiment, all of those things. In gold, I'll give you this, Rory, ever since that flash crash in the early hours of July or June the 26th, price has fully recovered. In fact, price is higher than it was then. However, the GLD has been rated for something like 65 metric tons of gold. And then, that just kind of fits in perfectly with some of the demand numbers that we're seeing. What did Turkey, what did they import? Like 70 metric tons just in July?
Yep.
Gee, I wonder if you can connect those dots. Anyway, these deals are done on purpose, and the effect is magnified by the time when they do it. Again, 7:06 Eastern time, like you said, is maybe just a few minutes after an Australian opening, but Japan's not trading yet. Europe is sound asleep. It's dinner time in New York. It is the lowest volume, lowest size bid and offer time of the day. And that's why these raids are affected at that time, because you get the biggest bang for your buck.
It's just incredible. To see these movements on the chart. My primary chart is Kitco, and I know it's not actual spot or anything like that, but it's one that is widely known, and like I said, it's my primary. And to see these massive spikes down and then up, do you think that this was a setup for what was to come on Friday, or are they associated with one another at all? Because as you know, there was a massive beatdown on Friday when the so-called BLS BS was released Friday morning.
Yeah, that move on Friday was rather outsized, if you will, compared to everything else. And I guess at the end of the day, Rory, it shines a light on two things. One, silver's extraordinarily small market and very easy to manipulate, right? It's a paper market that is hyper leveraged. You trade these contracts that have absolutely nothing to do with the physical metal. Again, think about that. The globally recognized price of silver, this important industrial and even monetary metal, is moved lower by 10% in a fraction of an instant by a bunch of computers trading what? Digital contracts? I mean, there's a disconnect there between what they're trading and what it's meant to represent, right?
Right.
So it shines a light of what a scam and a fraud that pricing system is. But, at the same time, we've got, I guess people need to understand the dynamics of this market, and what moves it, what causes these computers to buy and sell. And what happened Friday after the report really tended to paint the chart terribly again. And as you know, we started talking over the weekend at my site that now we've got to be really cautious again, because the three previous instances so far just this year where price has been smashed. Remember back in May, it was down 17 days in a row, something like that.
Yes, ridiculous.
The previous instances, all three of those, began with action similar to Friday's. And the weekly chart had what we call an engulfing candle painted on it, which is exactly what started those sell-offs back in March and May and back in July. And so I think this is now, unfortunately, a time we have to be cautious again. You mentioned we laid it out. Everything looked good.
Yes.
Everything, from the commitment of traders positioning to where we were versus the moving averages to the amount of speculator shorts that are in the market waiting to be squeezed. And instead, we got a lesson once again that about the only adage that consistently works in these crazy paper metal markets is when you're most optimistic is probably about the time you should sell. It's unbelievable. And when there's a complete washout in sentiment, when everybody hates it, when it looks the worst, that's the time when you always need to be buying a little bit too. And that's, again, unfortunately, it seems like we got that lesson again on Friday. We'll just have to see, Rory. I think this week is going to be an important week. The way that the dollar index bounced on Friday to get back up above the key 93 level. If that resumes its downtrend this week, maybe silver won't break down through 16 and we'll just write off Friday's anomaly. But this will be an important week to see where we go from here.
Well, I think that at this point, Craig, with all the information that's coming at us on a daily basis, I mean, most weeks are going to be important.
Yeah.
I mean, from now to the end of the year, I mean, we have all of these different scenarios that are all converging all at once. I mean, we have all these geopolitical situations going on. We have the sanctions that have just been implemented against Russia, which that's creating a whole new set of situations for the Federal Reserve note and for gold and silver and for economies. And the cryptocurrencies doing what they're doing. The now anybody with half a brain knows that these metal markets are manipulated, period. There's nothing real about them. They're as fake as what CNN reports on a daily basis. So, but what I want to ask you, Craig, is I want to kind of step back just for a minute. And Ken Hoffman, which I know you could almost recite what he said verbatim about the LBMA vaults being empty. That was in 2011, I believe, somewhere around there.
2013.
2013, okay.
Yeah.
And now we fast forward to just a couple of months ago, and Terry Duffy, president of the CME group, coming out and saying that on live television that gold should be at 6,000 an ounce, just because of what all's happening in the world. And I was listening to your conversation, your A to A with Rob Kirby the other day, and you guys touched on that. And I want to get, what is your take? Does the fact that the LBMA have the empty vaults, Terry Duffy making these comments, China, as we all know, acquiring gold hand over fist, Russia, the situation with them. I mean, why, other than the manipulation, I mean, why wouldn't we have $6,000 gold? And as Rob kind of alluded to, or it may have been you, was he kind of foretelling what is coming down the pike?
You cut out for just a second there, Rory. I heard was he and then is coming down the pike. Could you say that
was
last
he,
part?
Was he foretelling what is coming down the pike?
Yeah, you wonder about that, don't you? That was such an odd bit of audio and video of whatever that was about 3 weeks ago. Here's Terry Duffy, who's the CEO of one of the largest, I guess, arguably most important corporations in the world. And he shows up on Fox Business News for this interview. And you know how these things work, Rory. I mean, You don't bring a guy on like that for just an off the cuff, couple guys sitting around chuckling, having a beer. And he knew what his answers were going to be.
Right. He knew the questions and the answers.
The rebate programs that the CME offers to the central banks, all that kind of stuff. So he knows what's going on there. And so for him to come out and say that, the timing of it was just really odd. I don't know, Rory, we all have been aware of this now for so many years. And it's changed really as I've been involved in it, with my sites over the last 7 or 8 years. It was more manual. It was more, when I first started TF Metals Report, the reason I even had a site was because we based our price forecasting off of, just anticipating where the banks were going to act, So if you knew the metals were manipulated and you knew by whom, well, then you figured out, what their modus operandi was, and you could anticipate where they were going to act. And it was rather profitable way of looking at things back then. But now, Roy, it's now so automated. 90% of almost every single market now is HFT, and we've noticed, and you and I have talked about in the past, and I was one of the first people I think on the planet to notice in 2014 how the price of gold is tied now inversely with the Japanese yen. And it almost seems as if, the banks have it on autopilot, on kind of a lockdown, that gold can only trade in a range. And silver, as we've talked about, anytime it begins to move into a point where somebody is not profiting, somebody being one of these banks, then it gets slammed back down, out of the blue, whether it's at 7:06 in the evening or at 9:30 in the morning. And so I think there's a lot of justifiable frustration on people's behalf, that we sit here still in 2017 and things aren't happening. The only thing that gives me solace is knowing that math is still math. The problems are still there. I mean, it can be papered over on a daily basis and a weekly basis, and the illusion continues to be maintained that, oh no, everything's just prices per ounce. At the end of the day, I'm pretty comfortable with the math because I know that. Let's put it this way: one thing I'm certain of is the amount of actual gold and silver backing up all of these synthetic derivatives, whether they're futures contracts or GLD shares or unallocated accounts or all these people that think they own gold. When the time comes and this system has to be delevered back down to just 1 ounce, is all that there is in a physical market, I have no idea what the price is going to be. And I suspect Terry Duffy doesn't either, because how can you determine a dollar price per ounce when you don't know how many ounces there are? You know what I mean? And so at the end of the day, I mean, as frustrating as it sounds, and I know that there are a lot of folks that are buried and underwater in things like mining shares, and they can't figure out why the mining shares aren't going up. Well, again, it's all part of the whole entire scam. And for what it is, recognize that this is a system that simply is not going to continue forever. We don't know. Maybe it'll make it through the end of the year, next year. But at some point, the system will change. And as frustrating as it is, we just have to recognize that the math is truly on our side, and that one day, as Andy Hoffman likes to say, economic Mother Nature will reassert herself. But that doesn't do a lot of good for the folks that, had to sit through Friday thinking, okay, maybe now we're going to break out a little bit. Instead, they get the rug pulled out from under them again.
Yeah, I was shocked, to be perfectly honest. I mean, because, like I said, I've been following everything that where you had spelled everything out, and it just, I mean, it was beautiful, and it was like, okay, we're set up. Don't know how much higher we're gonna move, but we should be moving to the upside. And all of a sudden, those two weird situations at the Sydney, Australia Open happened, and then all of a sudden, just unbelievable beatdown on Friday, and it was just like, okay, should have known.
Yeah, and unfortunately, I think we all feel the same way. And I wish I had a better bit of news on a Monday morning. But now again, we have to prepare for what could be coming, because the chart looks awful. Now, putting that all back together, one of the things we track, and I know you're aware of this at the site, is on a historical basis. We look at that commitment of traders report, and we compare it to times in the past when it has looked similarly. And then you can kind of project, okay, well, this is probably, from a historical basis, about as low as we might go. And that's one thing that may preclude price getting driven much lower. If we were to move, Rory, to new lows for 2017, we'd probably be at the most extreme commitment of trader structure that I've ever seen, even better than it was at the end of 2015. And that's another this commitment of traders report. But everybody just looks at it as like a snapshot, as if it's a trading tool. No, you have to look at it from a historical perspective. And back in 2015, when we were last at extremes like this, price really went sideways to down from the late summer into December, before it finally went from 14 to 21, a 50% move. So we could sit here at these commitment of traders levels for, a couple of months. But if we were to drive price even lower from here, we would get to levels that looked even better than 2015. And so that may preclude us getting down a whole lot more from here. But again, at the end of the day, I would think there's probably people listening to us going, I'm so sick of this step, I can't even take it anymore. And look, they're not alone. I'm sure you feel the same way, and I know I feel the same way.
Actually, I'm a stacker. So,
yeah, and that's the right way
I
to
look at it and go, fire sale, thank you.
Yeah,
that's right. That's the only saving grace that I have, is that I'm able to pick up. And I just wrote an article a couple of days ago about the American Gold Eagles. Guess what's happening with American Gold Eagles right now as we speak? They are being set up to potentially be the best year ever to acquire American Gold Eagles. Well, why is that? Because it's either going to be the lowest produced number of gold ounces in a year, or the second lowest. Not going to be any lower than that. And that is going all the way back to 1986. That's where we're at with American Gold Eagles. If you're not picking up American Gold Eagles right now, and 1/10, whatever denomination, doesn't matter. They are on sale, and 5 years from now, when we have either the lowest number of minted coins or the second lowest number of minted coins, they're going to be, what are the premiums going to be on those? So that's what I look at. It's like, okay, keep driving people out of the market. I'll keep scooping it up.
And that's the proper long-term perspective. I just, I know you feel, and I feel, and probably most everybody at TFMR feels this way too. We'd like to see a bit of a rally, just to at least feel a little bit better, And geez Louise, it has been tough. And I think I've told you this before too. A capitulation is just not simply about price, because people think capitulation and a washout has to be price. Price would have to go to $800 for that to happen. Well, why? Well, because at $800, people would finally throw their hands up. Oh, okay, so throwing your hands up in frustration then is capitulation. Well, hell's bells, Rory. We're at capitulation right now then, right?
Yes.
Could there be any more people that haven't thrown their hands up in frustration and gone, this sucks.
Yeah.
I can't take it anymore. So like 2016, it wouldn't surprise me at all. If I've been talking about this since the beginning of the year. I've been saying I thought The highs for 2017 would come in the fourth quarter in both metals. Nothing has changed in that regard. We got, like you said, all this geopolitical stuff. We've got the government and the U.S. budget and the debt ceiling and the government shutdown, all that stuff pending in September. And there's all kinds of stuff still to come this year.
Yes.
It would still not surprise me at all. And for the people that have finally said, you know what, to hell with it, I'm going to, start trading Bitcoin, or I'm just going to move, I'm going to sell all my gold and buy Tesla. This is probably the wrong time to do that. And, those folks will all miss the lion's share of the move, from these lows. So anyways, as frustrating as it is, and I know Friday was just really hard on a lot of people. The challenge is to maintain your focus, on the larger picture, that things have not changed economically. The debt in the U.S. is still extraordinarily high, and it will never be solved. I mean, you really got to keep your eye on that. And again, like you said, Rory, be patient. Use this price weakness to your advantage by owning physical metal, not pieces of paper like the mining shares or futures contracts or options or the JNUG or all this other stuff.
Right.
It's hard to do, no doubt about it. It's hard for me to do as well, but that's really the only winning move in this game.
It's the only move that I have. I don't play in the paper market because I speak to you, because I speak with other analysts that are out there that are trading these things, and it's like I don't have the stomach for it. I just be perfectly honest. I don't have it. I mean, I know that if I go to, if I go over to SD Bullion and pick up a couple of coins here, or go to my local coin dealer, pick up a couple of coins from him, I know exactly what I have, and they don't change.
No, that's right.
And I mean, the thing with gold is it only gets more shiny.
No, that's right. And in your case, a day like Friday is far less frustrating.
No, it's
that's for sure.
Yeah. And you mentioned cryptocurrencies. Don't know if you seen this or aware of this, but it's something that I've spoken about in the past. I've spoken about it a number of times, that Bitcoin and blockchain technology, Bitcoin in particular, were developed by the NSA. It was built on technology, I should say, developed by the NSA, and now that's been confirmed. And with everything that's going on with the dollar, the sanctions that were just imposed on Russia are going to hurt the American economy and the European economy, but the Europeans are fighting back and saying, we ain't playing. Y'all are on your own. Do you think that the Phoenix or whatever, the Economist magazine in 1988 with that now infamous article, do you think that is going to play out over the course of the next, 15 months or 17, 18 months, as far as where we're currently at with the demise of the dollar? I mean, the Federal Reserve note is in serious trouble on the global stage, as you're well aware.
Well, and Roy, that's all part of what we do at TF Metals Report. I know that's all part of what you do at the Daily Coin. It's impossible for most folks to even comprehend a world where the U.S. isn't this major superpower and enforcing the dollar as the global reserve currency, right? Because that's all we've ever known. I mean, when was the dollar not the reserve currency? Pre-1944?
Right.
Okay, well, my dad might remember that. He was 15 then, but he's now like 87. I mean, there's nobody managing money. There's nobody running policy. There are no bureaucrats. There are no Fed officials. There's no ECB officials. There's nobody that remembers a time when the dollar wasn't the reserve currency. And therefore, nobody can imagine a time when it won't be, right?
Right.
So everybody just continues on. Oh, everything's great. And look, this is a transient privilege that the U.S. has had for the last 73 years. Okay, it will not continue forever, just as it did not continue for the pound sterling. And the world knows this. Especially the dollar creditor nations, the Chinese, the Russians, the Indians, they know that a new regime will eventually take the place of the dollar, or at least challenge the dollar. And all of that is absolute certainty saying it's coming. Now, whether it's in the next 17 months or 17 years, who knows? But it is definitely coming, just because you can look back at the failed regimes of paper currency and whatever was used as the global standard goes back for centuries. And so the history's not going to change that. Now, the U.S. will try to use its military to enforce that and to keep it from changing, and in the name of vital national interest, right?
Right.
But I suspect that this coalition of countries that are be aligned, together, and I guess ostensibly against the U.S., China, Russia, maybe at the center of that, they don't care. They're going to do whatever is in their best interest, their vital national interest. And so all of that then factors into the end of this experiment that we've been on, this Keynesian experiment. And again, when that day comes, events like Friday and the frustration that we felt will just be like a distant memory. I mean, it'll be like, that stuff doesn't even matter, this day-to-day noise. Yeah. And that's why you're doing the right thing by just taking a long-term approach, avoiding paper, and preparing for, again, that eventuality. I mean, we know it's coming.
It's coming. And speaking of which, I'll let you get back to your morning. And just if you would, Craig, tell folks about what you got going on over there at TF Metals Report and how they can get involved.
Hey, Rory, thank you. Yeah, we've been at it, 8 years now, Rory.
A lot of gray hairs later.
Yeah, I tell you, there are days. I mean, I'm extraordinarily blessed to manage this site, manage this business, and all of the great people I've met around the world, and all of the wonderful people that inhabit TF Metals Report, and all try to help each other out there. What I do, trying to predict, in a sense, what's going to happen next on a short term, is a whopping $12 a month. People use that. I've gotten a lot of people over the weekend emailing me, thanking me for the analysis we posted on Saturday about possible lower prices ahead, because I think most people use it to time their physical purchases.
Yes.
If you think you're going to buy 100 ounces of silver, and you're going to wait maybe till it pulls back $1, well, it saves you $100, and that more than pays for a year of subscription. And so most folks use it in that regard, but we also use it almost as like a support group. It's like it's an Al-Anon meeting. Hi, my name is Craig, and I first became addicted to the precious metals 8 years ago. And it's ruined my life, but I'm a lot better for it. That kind of stuff. I found God in the meantime. So we're all like one big support group and seeing each other through this. But I encourage everybody to check it out. And we're not giving up. We're not going anywhere. We know, as frustrating as it is, we are blessed collectively with the wisdom and the knowledge to prepare for these events, so that when the time comes, we're not part of the 99% that are sitting on their roofs with a sign saying, "Help me."
Exactly.
We are the ones that will be prepared, to help others.
That's right.
And that is our duty, our responsibility, and we'll just keep trudging forward, again, regardless of how nauseating a day like last Friday was.
Yep. That's all we can do. Just keep moving forward and gather up as many brothers in arms as possible.
That's right, my friend. Thank you again for the opportunity to address everybody.
Well, thank you, Craig, and I'll let you get back to your morning, and we'll do this again in the not-too-distant future.
All right. All the best, my friend.
And to you.